And welcome back. Because our housing market has been so volatile over the past several months, I thought it'd be interesting to share the latest housing market forecast according to Corelogic. This is because they announced their latest housing market forecast through August 2023 just last week. So in today's video, I'm going to share all the details with you. Also, stay tuned towards the end of this video because they shared the cities and states that have been faring the best and also the worst as well. On top of that, they also state the 5 markets in the US that had the biggest risk of home prices declining over the next 12 months. And with that said, let's begin today's video. And of course, check out that link below if you guys want a real estate agent referral, which of course is homeandmoney.com/Jason. So with that said, let's begin today's video. This was announced on the 4th of October here. This is on Corelogic's website here, and this is for August 2022 data, as well as our forecast through August of 2023. And by the way, home prices here are based on their HPI, which is their home price index. And according to Corelogic here, this is an early indication of home price trends. And by the way, Corelogic reports this on a monthly basis here. They report home price trends on a national level, state level, as well as a city level as well. So according to them, home prices nationwide increased year over year by 13.5%. That's August 2021 compared to August of this year. But on a month over month basis though, home prices actually declined by 0.7% in August 2022. So there's 2 things I want to touch regarding this because home prices declined by 0.7% in one single month may sound insignificant, but I've been making these videos for you guys regarding Corelogic's updates for over a year. I would say probably about 2 years now, ever since COVID hit. So by my recollection, I don't believe they reported a decline of home prices on a monthly basis in at least the last 2 years. So that's by my recollection. Correct me if I'm wrong. But this decline by 0.7% is also significant because this is based on closed home sales for August. In other words, this is impacting home prices based on when a contract was signed 1 to 2 months ago by the home buyer and of course the home seller. And of course, 1 to 2 months ago, mortgage rates were less than 6%. But as of today, mortgage rates are over 7%. So this figure here of decline by 0.7% in one single month should get worse in the months to come, given the fact that mortgage rates have increased so much over the past couple of months. In other words, as I always mention, when we're talking about any stats related to closed home sales, that's a lagging indicator what our housing market was like about 2 months ago. All right, so changing gears slightly, let's talk about their forecast next month as well as the next 12 months. So on a month over month basis, they're actually forecasting for home prices to be flat. So from August of this year to September, home prices are going to be flat according to Corelogic here. But on a year over year basis, they're forecasting that their HPI is going to increase by 3.2% from August 2022 until next August. And here's a side-by-side comparison regarding their current stats right now versus their forecasts. So currently right now we're down 0.7% from last month, but up 13.5% compared to 1 year ago. But the forecast is calling for home prices to be flat next month and only to increase by 3.2% over the next 12 months. And this, by the way, is their 5th consecutive downward revision of their 12-month housing market forecast according to Corelogic here. And because it's so hard to see or to find their previous forecast here, let me share that with you right now. Because as of April 2022 to April 2023, at that time, they were forecasting for home prices or their HPI to increase by 5.6%. That was the first year-over-year downgrade in their housing market forecast this year so far. And by the way, their previous forecast for March was for a 5.9% increase. So as of April, only a 5.6% increase. Then the next month, May to May of 2023, they had the 2nd consecutive downward revision of their housing market forecast here because they're calling for home prices to increase only by 5%. Then from June 2022 to June 2023, they called for a 4.3% increase in their HPI. And again, that's their 3rd consecutive downward revision of their 12-month housing market forecast here. And then in July, through July 2023, they called for a 3.8% increase in home prices. And again, that's their 4th downgraded so far this year. And now As of August 2022, over the next 12 months now, their housing market forecast is for a 3.2% increase in home values. Again, their fifth consecutive downward revision in their 12-month housing market forecast. And by the way, at 3.2%, this is on par with long-term averages of home price growth. So I'd love to hear from you guys. What do you guys think about their forecast here? In my personal opinion, it's very unusual to see that they're going to be forecasting for home prices to be flat from August to September of this year, given the fact that home prices decreased by 0.7% last month. It doesn't really make a whole lot of sense to me, given the fact that mortgage rates have been increasing so much over the past month. So again, rates right now are over 7%. Back in August, average rates were less than 6%. So the vast majority of August, rates were actually less than 5.7%. But again, rates right now are at 7%, or actually over 7%. So it doesn't make sense to me that they're going to be calling for home values or home prices to be flat when we had a decrease last month. And going back to Corelogic's report here, they stated the following here. Although U.S. home prices continued their 127-month run of consecutive annual gains in August, that's year-over-year gains in home prices here, they slowed for the fourth straight month to 13.5%. That's the lowest year-over-year appreciation recorded since April 2021, and partially reflects continued cooling of our housing market here due to higher mortgage rates. And by the way, as of today, which is actually Columbus Day, the 10th, this is actually a holiday here, so rates have not changed from last Friday. But right now, the yield on the 10-year U.S. Treasury note, which is tied directly to mortgage rates really, is at 3.88%. Going back to January 1st of this year, the rate there was 1.7% approximately. Now it's 3.88%, which is one reason why mortgage rates have been increasing so much. And again, as of Friday, according to the Mortgage News Daily, average rates for people with exceptional credit, of course, is 7.12%. Going back to August 1st, though, this is over a 2 percentage point increase in the average mortgage rates across the United States. And also at 7.12%, this is the highest rates we've had going back to 2002. In other words, a 20-year high. And because rates have absolutely skyrocketed, we're starting to see month-over-month decreases in home prices across the United States here. Corelogic stated the following here. The 0.7% decrease on a month-over-month basis on a national level here, regarding home prices, of course, indicates reduced home buyer enthusiasm, with nearly 3/4 of states posting declines from July. And the deputy chief economist for Corelogic stated the following. The increased cost of home ownership has dampened buyer demand and caused prices to decelerate at a faster pace than initially expected. And as I mentioned in my previous video, average costs for homeownership have absolutely skyrocketed, approximately 51% compared to 1 year ago. So if you're looking at home prices right now, or the median sold price right now compared to 1 year ago, it's going to cost the average home buyer approximately $885 more per month compared to the same time period 1 year ago. Corelogic also noted that housing markets in the West Coast and the Mountain West, which of course would be Oregon as well as Washington, as well as second home markets, recorded particularly strong price growth in the summer of 2021, but were the first to see month-over-month price declines during the same time period this year. In other words, some of the hottest housing markets that we saw over the past couple of years have been cooling off the most. And here's some trends I actually want to share with you guys today, according to Zillow. So the typical U.S. home value was unchanged in September from August. And by the way, Corelogic's report here is for August, and they're stating that we're seeing the biggest declines in home prices on a month-over-month basis in the West, as well as second home markets. That's for August. But for this report right here, this is based on September though. So the decreases in home values compared to 1 month ago have actually been more widespread than those markets that Corelogic is reporting on. So for example, home values in Phoenix, Arizona, Las Vegas, Nevada, New Orleans, Riverside, California, as well as Austin, Texas, have declined the most compared to 1 month ago. So check this out. This is Zillow's home value index as of September of this year. So at the bottom of this list right here is actually Phoenix, Arizona, where home prices, according to them, declined by 2.35% compared to August of this year. That was followed by Las Vegas, Nevada, down by 1.91%. Then New Orleans, Riverside, California than Austin, Texas. Zillow also listed a lot more cities where they're seeing a decrease on a month-over-month basis for home values, actually more so than home values going up. So look at this. On a national average in the US right now, they're stating that home values only increased by 0.02% compared to August of 2022. So all these other cities right here posted declines on a month-over-month basis. In stark contrast though, here are the cities that posted gains compared to August. Richmond, Virginia actually topped the list, a gain of 0.59%, followed by Miami, Florida, followed by Indianapolis, Indiana, Oklahoma City, Virginia Beach, and Cincinnati, Ohio. So that's changes in home values according to Zillow on a month-over-month basis. But have a look at this because here's changes on a year-over-year basis. Miami, Florida posted the biggest increases at 25.69%, followed by Orlando, Florida, Tampa, Florida, as well as Jacksonville, Florida. And also rounding out the top 5 was Nashville, Tennessee, an increase by 21.62%. So the top 5 cities here posted gains over 21% compared to 1 year ago, which is pretty mind-boggling. In stark contrast, look at the bottom of this list right here. In San Francisco, home prices only increased by 2.77% in September compared to September 2021. That was followed by Pittsburgh, a gain of 4%, and then Sacramento, a gain of also 4% as well. Los Angeles only increasing by 5.62%. All right, so going back to Corelogic's report here, they also noted that in August, no states posted an annual decline in home prices across the United States here. So every single state posted an increase in home prices compared to 1 year ago. The state that had the highest increases was actually Florida, increasing by 26.4%, followed by Tennessee, a gain of 20%, and then North Carolina also gaining by 20% from a year ago. And here are the remaining 10 states that posted the biggest increases in home prices on a year-over-year basis. So check this out, because in Texas, increasing by 18%, also Arkansas increased by the same amount as well, Nevada 19%, Georgia 21%, Arizona also by 21%, and South Carolina as well as North Carolina both increasing about 22%. And again, this is based on closed home sales for August, so it's going to be very interesting to see what this looks like in about 1 to 2 months when we truly see the impacts regarding high mortgage rates of over 7%. And here's a graphic showing the entire US by state and how home prices have changed from August of 2021. So the dark purple right here is gains of less than 5%, but still over 1%, or still over 0%, I should say. So in the range of 1 to 5%, I should say. So in Washington, D.C., home prices only increased less than 5% from 1 year ago. But in stark contrast, though, look at Florida, increasing by more than 20%. So the dark shaded states right here posted increases of 15 to 20%. The light shaded areas right here posted increases only by 5 to 10%. That was in Washington, Oregon, and Idaho, for example. Corelogic also provides some insights regarding home prices for the 10 biggest cities across the United States. So Miami, Florida led the pack by a gain of 27.1% for home prices compared to August of 2021. We also saw big increases in Houston, Texas, Phoenix, Arizona, increasing by about 18%. Same for Las Vegas. LA up by 10.1%. San Diego up by 14%. But in stark contrast, though, look at Chicago, Washington, D.C., as well as Boston, Massachusetts, increasing in the range of 7 to 9%. Corelogic also listed the top 5 markets that had the biggest risk of home prices declining over the next 12 months. And those were the following, which, by the way, all have a very high probability of home prices decreasing, above 70% probability of a price decline over the next 12 months. So number 1 is actually in Crestview, Fort Walton Beach in Destin, Florida, which is in this marketplace right here, or this area right here. Actually, I had to look it up. West of Jacksonville, Florida, but just east of Mobile, Alabama. And the market with the second highest risk of home prices declining over the next 12 months, according to Corelogic here, is Bremerton, Silverdale, Washington. Again, a very high probability. And by the way, this is a city or an area just west of Seattle. And coming in at number 3 here is Bellingham, Washington, which is located right here, just north of Seattle, very close to the Canadian as well as the US border, which is right here. And coming in at number 4 was Boise City, Idaho, a very high probability probability again. And then Reno, Nevada, also a very high probability, which is actually just located northeast of Lake Tahoe, which is a beautiful area here that borders California as well as Nevada. And Reno, Nevada is just northeast of Sacramento as well, about a 2.5 hour drive from Sacramento. And with that said, please check out that link below if you guys want a real estate agent referral. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day, and I look forward to seeing you on the next video.